Welcome to this week's discussion topic, which is all going to be about the tax advantages on rental properties, where I just want to illustrate the difference between repairs and maintenance and capital improvements. And it is quite a big implication you need to be aware of. The first main point I want to make, however, is get a good tax accountant to work for you. It's why we pay them what we pay them, so they can get the correct advantages for you and not get in trouble with the tax department. The other thing, the person that you'll need is the quantity surveyor, because it's their job to run these reports, be able to give them to your accountant and use them as a good legal base to get your correct deductions. So a few things just for you to be aware of though, for your own benefit, is the differences between repairs and maintenance on a property, and that's going to be where a tenant has actually damaged the property. Let's say they've stained the carpets, put a hole in the wall, etc., and you're rectifying that property and putting it back to the state it was prior to the tenant damaging it. And that is an immediate deduction. The cost of that can be claimed immediately on your tax return. However, if you decide to renovate the kitchen, put an extension on the property, you're improving the value of the property. It wasn't actually damaged, and so that is a different type of deduction. And that deduction is something that's called depreciation, where the value of that kitchen or the life of that kitchen is depreciated year by year over a period of time. So there are the differences between those two types of deductions. Now, it is really interesting to note that as a new buyer buying a property that's been previously extended or renovated, that deduction can carry through into your tax return, and so you can claim those deductions. I think that's great. Another really interesting thing that I learned is something called scrapping, and scrapping is the cost that you can claim on the undepreciated component of an item. Let's say a kitchen where the life might be, say, 20 years, and you decide to renovate it after 10 years. The remaining depreciation component for those other 10 years can be claimed as a scrapping deduction. But again, your quantity surveyor will know all about that, and your tax accountant will know all about that. So please use those parties. They're there to get you as much money as possible, and they're worth every cent of what they charge. Have a great one. See you next week.